Good morning. Welcome to today's episode, and we will be talking about what retiring business owner need to know before they take the exiting door. Okay, my name is Lunta Di La Paulo, and I am the founder of Yetu Accounting and Tax PLLC. We are a certified public accounting firm helping businesses improve their profit, manage better their cash flow, and reduce their tax bill. Okay, and we're gonna be talking about what business owner need to know before they start thinking about exiting, sell their business, or something along these lines. Okay, so let's get starting. Okay, so when I think about business owner we're looking to sell, well, it's typically about people who have ran the race, they've done their part, and they're starting to look at the exit door. Maybe it's someone who's past 60 years old, have done this for a few decades or several decades, and they feel like they're done, they're tired and they hit the end of the road. They think this is it, this is the end. Or perhaps it's a much younger man or woman who grew the business really fast. They made a little bit of money, and they feel like their life's priorities now are different. You know, they want to spend a little bit more time with their family. Maybe it's a you know grandfather who wants to spend more time with the grandchildren, or just someone who wants to pursue different interests in life. So the question really is no longer for these people how much more money can I make, right? Their life's priorities are a little bit different, and what they consider as important in their life, right, changed a little bit, especially for uh, my listeners who are over 65 of age, right? The goal is no longer really money, they're starting to think about the legacy they are leaving behind and passing the baton, right? So when I talk with folks like these and, you know, my experience in investment banking really taught me important things when working with business owners who are looking to sell their business, right? And I want to draw from these lessons that I learned from working with clients generating and running business with over 2 million plus in EBITDA across different industries, you know, and I want to share these lessons with you today. So, what do you need to know, right, before you exit, right? And I understand a lot of business owners really want to make sure, hey, I'm gonna sell this business, but I want to make sure my employees, my partners, or the people in the community that helped me build this amazing business that today is the pride of my family and the pride for many employees who worked in this business, right, are well taken care of, right? They don't want to be in a position where once they leave, whoever buys the firm is going to mismanage it, right? So, and we've seen situations like this happening. Okay, so number one, what do you need to know before you exit? The first thing you need to understand is the time frame. How long does it take to realistically sell a business? I know there are brokers out there who are gonna try to promise you they want to get your business and they want to be representing you. They'll make promise that, trust me, they're not gonna come true. Selling a business is not a simple transaction. It's complex, it's expensive, okay? You'll need to hire accountants, attorneys, M&A advisors, and other consultants to make sure you're getting the best value for your business and you're selling it to the right person, right? Uh, Typically, I've seen businesses selling between 10 to 18 months. This is probably not what you're expecting to hear, but it's the truth. And sometimes it can go longer, especially with businesses generating less than $1 million a year. Okay, these businesses usually stay on the market slightly longer. Also, it depends on the industry. Okay, I know, for example, accounting businesses are a hot commodity right now. If you have a great accounting firm, you can sell it in less than a year, really less than a year. Okay, but other industries are a little bit more challenging to sell. So if you are in a rush to exit, maybe because of a family illness or a divorce or any other major life change, first of all, I'm sorry you were going through this phase in your life, in your family, but I want you to be mindful, right? If you need to exit right away, if you have adult children, maybe bringing one of them and training them to run the firm could be the best move. But if that's not a place where you are, let's say your net income is 500,000 per year, I would recommend you to hire a manager, train them for 3 to 6 months. Sometimes it can take longer, and pay them 200 grand. You still have 300K without putting much effort to the business. Okay, so this is number one, the time frame. You need to understand how long it takes, and again, it can take between 10 to 18 months or even longer. So be mindful about that. Now, the second thing that I want you to understand when you start thinking about selling is to determine whether your business is ready for sale. Is your business ready for sale or not? And what does it mean for your business to be ready, right? The way that I look at it is to ask yourself, would my business be able to operate if I weren't involved with the business? Or would it continue operating if I significantly reduced my involvement with the business, right? So by having an answer to this question, you can actually determine whether or not you have a valuable asset on hand. Okay? Do you have proper systems, processes, policies, and procedures for your key functions to create, deliver, and maintain value for clients? Okay, critically important, critically important. So if you don't have those, I would strongly recommend to start documenting processes, systems, procedures, okay, to make sure you actually have a valuable asset on hand, right? And the third idea that I want to share with you here, if you're planning to sell your business or starting to think about it, right? It's really to understand who do you plan to sell the business to, right? And this is a question of who is the ideal buyer. When you close your eyes and take a second and you pause, who do you think would be an ideal buyer for your business, right? Literally, I close my eyes as I'm saying this to you, right? Who do you picture? And if you want to do this exercise with me, please take a second, pause the podcast and listen to yourself, right? And I want to give you some quick insights here about the two broad groups of potential buyers in the world of business acquisitions or M&A, right? We have those considered strategic buyers. And strategic buyers are the folks who are in your line of business, are usually your competitors, right? Or folks who deeply understand your industry and your business, right? These group of buyers are largely motivated by the desire to consolidate their position in the industry or the market, or they want to acquire key talent that are difficult to obtain or hire, or sometimes they want to and tap into a new client base or a new geography that would have been more expensive for them to go that way, to do it organically, excuse me. And oftentimes it's also these strategic buyers are motivated by the potential cost synergy opportunities in buying a business in the same line of operations. Two businesses don't need two CFOs or two office secretaries or two COOs. By buying your business, excuse me, they can remove some of the redundant functions and make the combined business more profitable, right? And then you have the financial buyers. The financial buyers is a universe with usually we think of them as investment groups or investing individuals who have money and want to buy a business for the purpose of buying low and selling high, right? It's just like buying a stock in the stock market, right? So these folks are gonna come to your business. They will make an offer. Usually, it's lower than a strategic buyer, right? They're motivated by the desire to earn an above average market return for themselves, for their investors. So these are the three initial thoughts that I want you to understand, right? First of all, we talked about when you want to exit, right? And the importance of understanding the time frame. We also saw the idea around whether your business is ready. And now we talked about, right, who should you sell your business to, right? So those are important decisions you need to make, important information you have to keep on hand. Let's talk about two more critical information you need to have and understand, and then we're gonna wrap things up. The fourth item is the deal structure, right? This is a fancy word for essentially how your business is gonna be paid for, right? Oftentimes, a deal structure can command significant creativity depending on who's buying your firm, right? They can make an offer that includes maybe a down payment right away, an earnout provision contingent to future performance of the business, or a seller note, or a combination of the above, or something else. Okay, so you need to be mindful that when someone makes an offer, it doesn't mean you will have, if for example your business generates 1.5 million in EBITDA or seller discretionary earnings, okay, and someone is paying a 3 multiple for it, which means the total price is $4.5 million. It doesn't mean when you sell the business, you'll get $4.5 million, right? It doesn't mean the same thing. So you need to be mindful about that. You need to think about how much do I need to get at the close, what's the absolute minimum, and then back from there. And of course, we help our clients negotiate these kind of things, right? So that we're getting the best deal possible for them, right? So it's important to pay attention to deal structure. And I want to throw something else here, right? When you're selling the business, make sure you know how the buyer is financing the acquisition. If, for example, you have an earnout provision or a seller note, if the buyer is over leveraging the business, you really need to think hard about this, because in the event of a downturn in the economy, would the business be able to meet all of its obligation, including yours? Okay, so make sure you understand how the acquisition is being financed. If it's 90% leverage, right? It also depends on the industry, right? I've seen businesses being acquired 100% financing uh, through debt, right? And the business still can do well, right? So I'm not telling you that there is rule of thumbs for this. Each case is unique and have to be evaluated on its own merits. And let me jump quickly to the last point and then we'll wrap up. The last point is, of course, if you live in a civilized world, there is almost always taxes, right? And here in the US, right, you need to consider the tax implication for the sale, right? Usually, asset sales are favorable to buyers and stock sale favorable to sellers. So, what are you selling? Are you selling the assets of the business, things like the book of client, vendor relationship, IP of the business, other tangible assets? What are you saying, selling? Or are you selling the entire stock of the business, right? So each one of these would have their unique tax consequences, right? So we're at the end. We talked about five important items, right? Just a quick recap for you here, right? We talked about the timeliness, how soon you want to exit. We talked about whether your business is ready for sale. And then we talked about the third idea around who is an ideal buyer for your business. And then we moved into the fourth idea about the deal structure. And we wrapped up with the tax implication of a business sale. Here's one bonus idea for you: confidentiality. A business sale can be a very disruptive event in your life. It's emotionally charging, okay? And you need to make sure the information about the sale is kept confidential, because if the wrong people get this information, you can see employees leaving because it creates uncertainty to employees. Are we going to stay around or should we start finding new places? It can also impact your relationship with your vendors, right? The vendors can think about, are they in financial distress? That's why they want to sell. Should we tighten our credit concession to them, or what's going on, right? But more importantly, you really need to have a conversation with the people that matters the most in your life, your family, your children, your spouse, if you have those, right? And communicate how this could impact them, their lives, your family, right? And why you are doing what you need to do, what you're planning to do, excuse me, right? So maintaining confidentiality is important, but also you really need to make sure, you know, this information is not distributed to people who shouldn't know, right? So here we are at the end. We're almost 20 minutes. I hope this was very valuable to you. And please let me know, let us know if we can help. We have, personally, I have helped many small business owners sell their business through my investment banking career. I was an investment banker for almost 2 years, and it was an amazing journey. And the lessons that I learned there, I bring to my firm today to help small businesses succeed. All right. You'll find our contact information in the link below. Please let me know if I can be of value to you and your family. All right. Cheers.